Hello, everybody. Good afternoon. Happy Tuesday, April 14th. I'm Michael Lee with Reconciled. I'm here with Chris Macksey of Prefix Accounting and Jacob Schroeder of Ascend Consulting. And we are here to give our daily COVID-19 accounting update as it pertains to your business. We have an update today on new guidance that has been provided by the Treasury and the SBA related to self-employed individuals, independent contractors, and partnerships that are applying for the SBA PPP loan. So just to give a quick review, last Friday was when independent contractors and self-employed individuals were eligible to apply for the SBA PPP loan through their bank, through their SBA lender. And we all were waiting for guidance on clarification on how to do that and what documentation would be used to calculate the loan max. In the meantime, banks and accountants were making an assumption on what would be used, and we were fairly close to correct as the SBA's guidance aligned with most of our assumptions. So Jacob or Chris, either of you want to come and give a summary of that guidance for our watchers, listeners?
Yeah, so kind of as we expected, we're taking Schedule C net income, basically line 31 from a Schedule C, plus the amount of wages you paid to get to your total payroll for the year. When I say total wages paid, it's the same calculation as we've talked about for many times, including health insurance, including benefits. The one interesting thing from the true sole proprietor Schedule C side is you are adding that in. Some of us had thought it was going to use Schedule SE, but it is using the true Schedule C, which becomes a lot easier. It does need to be the 2019 return, which means if you have not finished your filing yet, you better get that done. It does not have to be filed. It does not have to be filed, but it has to be on a 2019 form. So you cannot use a 2018 Schedule C. So get with your CPA, get that mocked up, so you can use that to get your loan amount. For partnerships, we are using wages plus partner income, and partner income is net income from self-employment. So that is what you'd be using there, as many of us assumed going into that.
So basically that just turns around, and every single CPA that thought they weren't going to have to really worry about the remainder of tax season until June, July-ish is now like Aragorn in that famous scene where he's like lining up against everybody in Helm's Deep.
So I think there was
tax returns.
Yeah, so I think there was, people were asking, well, why, at first they told us not to worry about the 2019 return. They even extended the deadline, but now they're making it a requirement for self-employed and independent contractors to calculate this. I think there's a good reason. First of all, you could have filed a 2018 return and not actually be in business during 2019 into 2020. So I think there's an assumption that if you're filing a 2019 return, therefore it's safe to assume you probably stayed in business into 2020 by February 15th, 2020. So that's one, I think, assumption that made them be able to limit the amount of fraud that would possibly happen through this program. Secondly, then they can also tie it to the Schedule C expenses on your Schedule C in regards to other things like rent or other forgivable expenses like interest, rent payments, things like that are part of the forgivable expense list. So it would be helpful. But you're right, there's probably this mad dash now to go get your taxes filed, because like most independent contractors probably waited until close to April 15th to get their returns filed, didn't do it when the pandemic hit, was told it was going to be extended, so have still waited. Many probably did extensions. I did an extension for my business. So now you're scrambling to your CPA, who's, may or may not be working a whole lot right now during this pandemic. Maybe has said, I'm going to work more in July or June or, whatever the new extension date is. So you're going to have to work with your CPA to get your 2019 return if you are independent. Now, Jacob, did you do a summary for partnerships? Want to give a clarification on partnerships?
So partnerships are going to use net income to the partner. So on a partnership, there are K1s that are produced to each partner, and on that K1, there's a box 14, which is net earnings from self-employment to each partner. So you would total up those net earnings from self-employment, still maxing out at the $100,000 max, to figure, and then add that to your payroll, and that is your total annual payroll cost divided by 12 times 2.5. So that is how this is going to work from that standpoint. So in both cases, we are adding the net earnings from self-employment together and putting those in with your wages to calculate that. If you don't have wages, you're just using net earnings from self-employment with that $100,000 cap still.
And just to clarify for this, because I know this is going to be a question, that is different than draws, correct?
Yes.
Yes.
And that is why you have to have your tax returns done, because they are looking at what the true net income is. Yes, you could have made net income wise $100,000 and only taken out 50, but $100,000 will count. Or you could have taken out $150,000, but with depreciation, your net income was only 50. So depreciation could really impact this, because that could lower the tax amount that you are paying, that you paid income tax on. So that net income is what's going to drive this loan amount.
That's great. Dan, welcome to the panel. We've missed you. I know you were spending your time catching up on the latest guidance from the SBA. Any additional thoughts or secrets that you know of related to independent contractors or partnerships that Jacob, the encyclopedia, has not explained that you might have?
No, I think just tailing in on the end, his statement, I think, rings true from the standpoint of it's really going to be based heavily off of net income, making sure that that's the primary information that's being provided, because that's where most of the content is going to come from. But also with that, you got to make sure that hopefully your financials are in order. You have clear enough information. So if you're not, and I'm sure you guys talked about this before, if you haven't, or you're not using QuickBooks in any way, shape, or form, you need to be hopping on that, some sort of reconciliation, some sort of reporting, some sort of organization of your total income versus what you have spent through those periods of time, so you can make sure that it's calculated correctly. If you don't have your taxes for last year, well, hopefully you can get on that pretty quick too, so you don't run into any potential issues on that as well.
That's good. Yeah, Chris, you're about to say something. I know you're angst and
No color commentary here yet. No jokes.
That's really great. Well, I'm not sure what else we can talk about here.
So I do want to talk a little bit about, and just throw this out there, there is some clarification on forgiveness as well. I know there's been a lot of questions around this. So for the Schedule C or the partner, the way forgiveness is going to be looked at is they're going to assume that you paid yourself the same as you did in the prior year. And by paying yourself the same, that's not draws once again. That is, you had the same net income. So during this period, you will be able to use that. And even though if your income goes down, it will not impact your forgiveness calculation from you personally. So I think that's just an important thing to throw out there. They are recognizing that businesses are not going to maintain equal at the top, right? So it's not going to, you're not going to have the same net income this year that you did last year, more than likely. So they are giving that ability to have forgiveness despite that impact. So I think that's important there. Some other interesting things on the forgiveness side, owner benefits don't count. So like the owner's health insurance on a Schedule C or a partnership do not count in the forgiveness thing. The SEP contribution doesn't count. And that somewhat makes sense when you dive into payroll law and understand how those are treated from an individual taxation standpoint, where they are not part of the Schedule C. They actually flow into the front of a 1040, not in the business, even though it is a SEP or a self-employed health insurance, right? So those impacts are driving some of that, which is a little different than maybe how an S Corp or corporation will be handled. One thing that's really interesting to know is the gas from that you spend in your vehicle to drive for business counts as a utility expense. So I bring this up because utilities are calculated in that 25% forgiveness piece, right? So many self-employed people or independent contractors, they may not have rent, they may not have real utilities, right? But they could have mileage. So therefore they could get that. Now, if you've not taken mileage on your prior year tax return, you can't get credit for your gas expense this year on a utility. But those are things that if you get your PPP, you should start tracking. Make sure you know how much you spent on gas, because there may be a forgiveness component to that.
So I guess my question to you guys with this is, have you seen any processors changing the forms and templates specifically for these people? And if so, how are the questions going from that standpoint? Are you seeing any major issues that are coming across from it?
So we did see some banks, even before this guidance, already assume for partnerships this kind of calculation, and we're doing it fairly correctly. Now, it is interesting that I did see some banks take 2019 only, and then I saw some banks do rolling 12. So it depended on the bank you were working with, what they were willing to take. And then I saw some banks literally make you calculate your forgiveness now and provide them a narrative of how you were impacted by COVID-19. So it's a wide swath of requirements from banks, even on the corporation, the companies that had employees, and where the guidance was super clear on what could be used. The banks really took stand on their own underwriting decisions. So in this situation, I could see banks also taking some leeway, even though there's some really clear guidance now. I could see them taking some freedom on what they're going to allow and not allow, because there were banks literally sending you a spreadsheet saying fill in 2019, but then asking you to fill in a monthly average of 2000 of rolling 12. You're sitting there going, well, which one do you want? Why do you want the 2019 number and the rolling 12 using monthly average? Doesn't make any sense. But banks were doing that, and so confusing customers. So I could see them doing the same thing with independent contractors and with partners, if they want to take some underwriting kind of risk out of their own pants. So we'll see. We'll see what happens there.
Yeah, I have one bank that already has rolled this out over the weekend, but that's the only one and that I've seen.
So I think that's the part that's going to be a little bit tricky then, though, is, I mean, all these people have been waiting for 2 weeks, from past everybody else or even longer to get into this space. And now some banks, it sounds like, don't even have the right checkbox in place, of who you're applying for, what you're going through. And the questions are different. And I see this as a potential issue for holding up the process for some people as well, and making sure that they file correctly and file on time. Is they're going to be asked for, 940s and 941s, which aren't applicable in most cases to self-employed or to, partnerships or things from that standpoint. And so I hope this doesn't become a major stumbling block for people through that process.
Yeah, I mean, that's the thing that's like that, this is good, but there are elements of this that still kind of suck, and that are you going to be able to find a bank that is going to get this done and be able to apply for it in the amount of time left that there is with the remaining money? Sorry, that's a confusing statement, but the money is getting close to running out. It doesn't look as though the extra $200 billion is a done deal. It might be dead in the water, and so you've got to calculate, roll the dice with this and say, do I just go with my payroll information and forgo all of my personal net income, or do I wait?
And that's important as we look at the big question of, are more funds going to be added to this or not, right? So this morning, I think the SBA's number was 242 billion has been allocated. That was 8-9 hours ago now, so I'm sure they issued quite a bit today. So it's been varying how much they issue a day, but now that Chase and all the bigger banks are online as well, one estimate I saw was about $40 billion a day they were expecting to be able to handle now that everybody's online. So if that's the case, we have 3 days max left, right? To get through that. And that's counting maybe today, right? So that means you got 2 days left. So Thursday, we're out of money. So to Chris's point, it could be important of, do you want to hang yours up on this or not? Now, I'm not saying there won't be more money added to this. I won't say that this doesn't get slowed down a little bit. And you may start actually seeing the dollar value decreasing by day, because we know some banks prioritized bigger loans on the front end, right? So if we prioritize the big ones on the front end, we're doing a lot more small ones, our money's not going to churn as fast, right? So, but, I think Chase had on like Saturday, they were saying they had 250,000 apps. So, that's a massive amount of applications that are sitting out there. And where are you in that queue? And do you want to risk the potential that you get hung up or not? I think is important, and we don't have those answers. And it's going to depend on the bank you work with, right?
Well, I think the one thing that plays onto this too, and it's hard to go into it, is I almost have to ask, like, how many times did each of you apply, to this process too, right? I mean, I know we applied to 2 different places, so we've already just totally effed up, that system and calculation on who's in what and how it goes through it. We did, communicate to one of our lenders, hey, you're moving too damn slow, so we're going to go with someone else. And they've been slow, but we understand, what's expected. At least we have some communication regarding going on. Michael, what's the over under, I guess, on who applied? I think Jacob, you went straight to your lender, so you had one, right? I mean, you got one, one through that process. Chris, how many for you? Just one? You had to get. So Michael, how many do you have? Beat me out on the 2, please.
6 to 1, half a dozen of another. You know what I'm saying?
So that's one of the things I think about through this process too that makes this difficult is we also know that there's, how many applications have gone in through the queue, how many of them are duplicates, how many of them are triplicates or quadruplicates. And that was the part that's really difficult about this process too, is the only way they're going to weed those out from those lenders is either you as a consumer reaches out to them and say, pull this because I'm applying through someone else, or soon as they go to push you in and they get the kickback from the SBA that says, hey, this company's already applied, kick them off the list, yes. And then you're out of the queue. And so that's the trouble is how many, I've spoken to a handful of people who applied at, a dozen places. I mean, who's going to talk to me first, right? I mean, because to the point of this, there's a lot of people who need money. And so why not, right? You don't have a loan number out there right now. And so what's the risk to you other than someone saying, oh, hey, you got there earlier than this last person through the process? So I think we're going to see a little bit of that fall out over the next couple of weeks as well.
Yeah, that's what we did is that's what I did, is I basically said, who's got portals up? I'm going to apply. But until they literally whoever asked me for actual documents, right? Actual calculation documents, that the first group to ask me that will be the ones I go with. Because until they do, they're not getting you an SBA loan number, right? They need that documentation, they need the calculation, and then they're gonna go get you in the queue, get the SBA. So that's what I told everybody is if you just fill out a form and you put in an estimated number, unless they ask you for documentation and calculations, they're not planning to get you anything. So you want to go with the group and then my bank ended up being that first one because they just did it all manually, which was awesome. And, I'm going to send a nice gift to my banker for the hard work they've been doing. And I know they're working overtime. They're working a ton to do this. And so it's great. I think it's really, really good.
It looks like the SBA released some numbers last night, numbers by state even. So 247.5 billion approved as of the end of the day yesterday. Average loan size is $239,152. 70% of the loans are under $150,000. So by far the majority is smaller.
So that those are very interesting percentages when you say the average is 275, but 75% of them are that's pretty significant to see the difference on how many are well over that probably that $500,000 threshold to $1 million threshold.
So I think the interesting thing was the number the SBA released Friday night was 178 billion. So that means we did, in Saturday through Monday, we did $70 billion worth, right? So we don't know how much the bankers worked over the weekend approving and then Monday. So that kind of gives us a ballpark, right, of what that looks like for a weekend plus a full working day. So it'll be interesting to see where this comes out today, at the end of the day today, because it sounds like they may be starting to release those numbers regularly. So could be really interesting to watch. Texas had received the most at 21.78 billion, California 20.85 billion.
Yeah, interesting. Well, great. Well, if there's nothing else, I think this has been a great short, sweet update. Thank you guys. We'll look forward to catching up tomorrow. And look on the SBA website for this new guidance that came out, and I'm sure they'll have it up on their website. And we hope to have some more news and some more PPP loans funded for our customers through their respective banks and lenders. And but today, as it stands, the majority of our customers and the majority of us have not received PPP loans. So if you have not received that either, don't feel left out. You've joined the ranks of the rest of us who are waiting for stimulus financials and stimulus money. So talk to you guys tomorrow.